Hey everybody, welcome back to the channel. Today I want to go over the AM Silver Bullet for Tuesday, October 3rd, and we're going to use the Kraken Silver Bullet. So this would be the start of the 10 o'clock hour. But let's zoom out real quick and let's look at what has gone on thus far. Okay, so let's scroll out just a little bit. I know it's really small on the screen, but bear with me here. So we're going to pull up the Kraken Silver Bullet indicator, and I'm going to scroll down to the sessions right here. Okay, also we have the previous day high low right here, and we have the New York midnight open right here, and we have a new week opening gap right here. Okay, so over here on the sessions, one of the things the Kraken Silver Bullet indicator does is marks out your highs and lows of your sessions. Okay, for session liquidity. All right, so we're just gonna mark out the Asia session right here, and just kind of see how this played out so far on this day. Okay, so from here to here is the high and low of the Asian range. So what happens in London, we take out the low, and then during the silver bullet hour, we take out the high, right? We go a little bit past, take out the new week opening gap, and we come over here, and then we start consolidating. And then at the end of London, before pre-New York, we're coming down, right? And right after the New York open, which is right here, this line right here, we take out the previous day low. Okay, so previous day low. Now, what do we expect to happen here? Okay, what do we expect to happen here? We expect a reverse, a bounce back, right? A pullback. How high can it go? It can come all the way up here and take out these highs, the London high. Let's put the London session on here. Now we know Asia has been taken out, so let's remove the Asia session. Let's throw on London. Okay, let's move over. And there's the London low and London high. So obviously the London high is still available, right? It hasn't been taken out. But the London low has been taken out right here at, 7:09 a.m. Eastern Time. Okay? So we take out the London low, and then we keep coming down, we take out the previous day low. And now we've kind of been pulling back. All right? High to low, I'm going to throw the fib on there, right? I'm going to throw on the fib. Let's just see here. I'll just zoom in here so I can get this a little bit more. There you go. Let's show the fib from high to low, and let's see, it is pulling back to optimal trade entry, right? So right here, do I know it's going to hit that and come down? No. No one does. I don't care what anyone says. They don't know for sure either. They're waiting for price action to tell them. And right now it's telling me it's stopping there and consolidating right here. I need to see break pass and continue higher. And then maybe we're going to take out this high here. Or if it comes down, I want to see how it reacts to this fair value gap right here, this fair value gap right here. And again, I would be targeting this low here. Or I would also be targeting the previous weekly low if it breaks down here. Okay, if it breaks this, this is my next target. Why? Because that's closer than the previous day high, and the London is right here. So where we're at, we could take out the London high or the previous weekly low. Right now we're closer to London, so I'm waiting to see what price action does here as it starts the hour. Okay, so if it gives me a signal that it's going higher, then that's what I'm targeting, the London high. If it comes down lower and it breaks, down here, I'm looking for previous weekly low, and I'll take an entry there. Okay, price action's got to tell us. We can't decide, oh, I'm going to target this because that's what I want. No, price action has to tell me what it's going to do. Okay, so that's what's got to tell you as well. Okay, let's do that like this. Well, there you go. Okay, so let's see. Candle by candle, I'll buy and sell here. So let's just see what happens. Wow, okay. Violated this. Violated that. Let's throw those on there. So that's an inversion fair value gap. Here's an inversion fair value gap. Okay. All right, so what I'm aiming for is this low. Why this low? Well, because this could just be, it could be news at 10 o'clock. Yeah, so that was the news. It was news, a Jolt's report, something like that. So there's a big news scandal. So I'm just waiting to see what's going to happen here, right? It could be just coming down here and going higher. We don't know. So ideally, I want to see a major swing point getting broke. Yes, market structure is up here. Market structure shift, it already broke it, sure, and I could take a trade. I really want to see a major swing point here because news is very volatile. So I want to see how it's going to react. So let's just, didn't quite hit that fair value gap right here, that inversion fair value gap. Okay. So let's keep going here. Okay. So that broke right there. Okay. Candle close. There's that market structure shift that I'm looking for. I know it's up here, but that's the swing low that I was looking for. So I'm just going to say that's the market structure shift for this safe discussion right here. Okay. That's what I'm going to use. So now, if I look at this, am I closer to the previous week low or London high, which is up here? Obviously, the previous week low. That's a major liquidity point. So I'm looking for anything to get me in this trade over here. Okay, so when I look left, I can see this breaker block right here. Okay, why is that a breaker block? It's a high, a low, a higher high, breaks through it. When it trades back into it, I can take a trade to go short. So if I don't get out another fair value gap, then I would take that trade. Okay. So let's see what happens here. Didn't quite hit it right there. I don't want it to go too far down here, but if it hits the previous week, it violates my trade. It voids my trade. So a pullback now would be great. Okay, yes, there's a fair value gap right here. Why am I not taking it? Well, because from high to low, that's definitely in a discount to go short. I'd take the breaker. That's fine, even though that's still in a discount. So let me show you where the discount would be. So I went from high to low. It's still in a discount, yes, but this is so far in a discount that I wouldn't even consider it. Okay, I will consider a breaker because I've back tested it enough. And I'll trust the breaker to go down here. Now it could take me out and I'd have to go off the order block, or I can come into this fair value gap, right, with these inversions. So if it, I'll take it, but knowing that if it breaks it, I'll have to take an entry up here to go short. I always hate these because I have to take the sell right here. We would have had one up here, so I'm gonna show you where I would have sold it based on this right here. 5 handle stops, max I do, so right here, and then I'm aiming for the previous weekly low. That's 18 handles, 18 points right there. Okay, where would I take a partial? Right below this low here. So let's put that on here. Where I take my partial right there. All right, so let's move this to 1. And let's see what happens here. Close. Perfect. Buy 1 there. I'd move my stop to break even plus 1, so I'd go right here. This would be my trailing stop. It'd actually be like this. It'd be like right here. Okay. All right, at that point, then I'm looking at this fair value gap right here to remain open. So I'd be moving my trailing stop right there. So let's see what happens here. Okay. Done. There's your trade. So let's see what happens the rest of the hour. Would I be trading anymore if it came up like up to here or anything? No, I wouldn't. I just took 18 handles, 18 points off the market. I'm good. I'm not even trading the PM session at this point. I'm good. Got my money and I'm getting out. All right. Let's take the short position off. Let's go through this trade. All right, well, we saw that before the day started, Asian session was taken out during London. London high was left right up here, and then we took out the London low right here. This is before the silver bullet hour. Then as market opened, it took out the previous day low right here. And then we had price started pulling back. We pulled our fib from the high to the low and saw that it stopped at close to optimal trade entry. Then before the silver bullet started, we had two ways this could go. We could target the London high. Let me throw that on there real quick. The London high. You could have aimed for the London high right here. You could have gone up. Gave me some market structure. Could have aimed for that. No problem. A lot of liquidity resting above that, right? Or it could come down, break structure, and then we could targeting the previous weekly low. Okay. Obviously, it went further than that, but we had to wait for price action. We're kind of here in the middle, from right here to here, and from here to here. We're a little bit more towards the London high, but we're kind of in the middle. We need price action to show us what we're doing. It could go either way, and so at that point, we kind of sit on our hands and let price action show us what it wants to do. What happened? News candle came out and just spiked down, leaving behind two inversion fair value gaps and never got touched. Kept coming back through. We marked out our breaker block, high, low, higher high, broke through, and then traded back up into it. We would have taken a limit order right here. We got in right here due to trading view. And then we took our first partial right here, and then we aimed for our previous weekly low, which was 18 handles away total. Okay, that was from here to there. Yes, it traded down further, and if you left a runner, you probably would have got another 13 handles, so another decent run afterwards. But that's how you search for liquidity, and that's what we use the Kraken Silver Bullet indicator for the AM session on October 3rd.